In this particular video, I'll be talking to you about the age groups and their investment patterns, which will be useful for various people. Hello everyone, welcome to Invest Expert India. I am Srinivas Murthy. I've been talking about various investment opportunities and also various investment instruments that are available in India. You must have heard of Abraham Maslow's theory of need hierarchy. There, he talks about the basic needs, and one level above that is safety and security needs. We will be talking about the place of investments in Abraham Maslow's theory of need hierarchy. We have many investment instruments like mutual funds, shares, insurance, and fixed deposits, and things like that. When we are talking about investments, there are two major things that we need to understand. Number one is investment through insurance, and number two is other investment instruments. Which type of investment should be first? Is it investment through insurance or other types of investments? First of all, let us look at the hierarchy of investment needs. The bottom of the pyramid, at the bottom of the pyramid, it is the fulfillment of basic needs, and above that is life and health insurance, and above that is short-term goals, and above that is medium-term goals, and at the top it is long-term goals. The basic contingency fund should be available to you as and when you need it. You can keep them in banks or any liquid funds from where you will be able to withdraw immediately. The second level is life and medical insurance. Health problems and accidents can happen at any point of time in anyone's life. If you do not have sufficient medical or health insurance and life insurance, this can be a big problem for the family. All your hard-earned money might go into the medical expenses and you will be left with nothing. Therefore, it is very much essential that you have sufficient life insurance cover as well as health insurance. If you want to know what is sufficient amount of life insurance or health insurance, you can set up a free call with me by clicking the link given in the description below. The third level is short-term goals. What are short-term goals? Maybe attending a wedding or attending a party or celebrating a festival or upcoming repairs and maintenance to your home. Such things can be planned in short-term goals. The fourth level is medium-term goals. What are medium-term goals? Maybe you are planning to buy a car, maybe you are planning to buy a house, and maybe you are planning to have children, and all these goals which can be fulfilled in the next 10 years can be termed as medium-term goals. The fifth level is long-term goals. What are long-term goals? They can be planning for a pension which is required even after retirement. A regular income is required after retirement, and there can be a plan to go around the world with your family. Such things can be termed as long-term goals. As discussed, immediately after providing for the contingency funds, you need to think of insurance needs, health insurance as well as life insurance. So, the health insurance and life insurance needs come first before you actually plan for your short-term, medium-term and long-term goals. And finally, let us have a look at the kind of instruments in which you need to invest as you keep growing in your age as well as your income also keeps growing. As discussed in various other videos, you may be aware that there are investments with low risk and there are instruments with medium risk and high risk properties. The first thing that you need to make sure is that you provide for sufficient insurance, whether it is life insurance or health insurance. This comes with low returns, but it gives a safety and security net for the individual as well as for the family. You can have a pure insurance scheme or an insurance scheme which is clubbed with investments. If you club investments with insurance, the returns are going to be usually moderate. And then you can move on to mutual funds, where the risk levels keep on varying depending on the requirement of an individual as well as the funds that are floated or provided by various mutual fund houses. In the beginning of your career, when you are in your 20s and 30s, you can afford to take the funds, or you can afford to invest in the funds where the equity portion or equity component is higher. And when you move to your 40s and 50s, then you need to reduce the exposure to the equities, and accordingly you need to choose the mutual funds. And above 60 years, you need to curtail your exposure to mutual funds or high risk funds to the lowest possible level and have a steady and debt related investments. And when is the right time to invest in stock markets? It can start as and when you have sufficient money to take care of the other contingencies like insurance, mutual funds, which can fulfill your immediate needs, and the insurance needs and short-term goals. Then you can start thinking of investing in stock market, and these things can fulfill your long-term goals. These are some of the well-known and basic investment instruments which we have talked about. Apart from these things, there are other avenues of investment such as real estate, gold, and cryptocurrency, which can be looked at after fulfilling this basic investment structure. If you have started earning and thinking of investing, please keep the levels that we have talked about in your mind and plan from the basic needs, from fulfilling the basic needs to your long-term goals. If you need a professional advice on your investments, you are welcome to set up a free call, as I have already explained to you, and you can also visit our website akshayarevenues.com. Please subscribe to our channel to watch more videos on various investment opportunities in India. Thanks for watching and see you in the next video.